All right, so today we're going deep on dividends and share buybacks. And you know how sometimes it feels like there's a bit of a conflict of interest going on there. We found this pretty funny meme, actually. It's from, that subreddit, Dividend Gang. Yeah, those guys are pretty into getting those dividend payouts, right? Anyway, this meme, it's like a conversation between a CEO and a dividend investor. And, well, let's just say the investor is maybe a little snarky.
Yeah.
But it really gets you thinking about how companies use their money, that free cash flow. Because sometimes it seems like what's best for the CEO and what's best for the investor, well, they don't exactly line up. So before we get too far into the meme itself, let's just make sure we're all on the same page about what we're talking about here. Dividends, those are those payments that companies make to their shareholders. Usually it comes out of the company's profits, and it's like a nice, steady income stream for investors, kind of like getting a little bonus just for owning a piece of the company. Then you've got share buybacks, and that's where a company goes out and buys back its own stock from the market. This reduces the number of shares that are out there, which can actually make the remaining shares more valuable. Okay, so back to our meme. The CEO in the meme, he's all about those buybacks. He says they're more tax efficient for shareholders. And, he got a point. When a company pays out dividends, investors usually have to pay taxes on that income right away. But with buybacks, sometimes you can delay those tax implications, until you actually sell the shares, and maybe by then you're in a lower tax bracket. So yeah, buybacks can be good for taxes. But here's where our snarky investor comes in. He basically calls out the CEO, reminding him that, hey, a big chunk of your pay comes from stock options, right? And those stock options let you buy company shares at a set price. So when a buyback happens, it usually pushes the stock price up, and guess what? Those stock options are suddenly worth a whole lot more. So the investor's basically saying, hey, are you really pushing for these buybacks for shareholders, or are you just trying to line your own pockets? And you know what? That's a pretty fair question. Of course, buybacks can be a perfectly legitimate way for a company to return value to its shareholders, especially if they think their stock is undervalued. And it can also signal to the market that they're confident about their future growth. On the other hand, dividends, well, those provide that reliable income stream that a lot of investors love, especially those folks who are looking for steady returns. And dividends can also be a sign that a company is committed to sharing its profits with its investors. So here's the takeaway. When you're looking at a company's financial decisions, don't just take their word for it. Dig a little deeper. Ask yourself who benefits from this. Think about those potential conflicts of interest and how those decisions might actually affect you as an investor. After all, it's your money on the line. And understanding how all this works, well, that's how you make smart decisions. So next time you see a company announcing a big share buyback program, think about our snarky investor and ask yourself, is this really in my best interest, or is something else going on here? Just something to keep in mind as you navigate the world of investing.